Good morning, everybody, and welcome to EXR Energy's strategic plan update. I'm Stuart Nichols, the company's Chief Executive Officer and Managing Director, recently appointed about 6 weeks ago. Thanks for taking out the time this morning to join today's call. As you'd be aware, the company's gone through a management refresh as it focuses 100% of its endeavours on the exciting acreage that it has in Queensland's Turin Trough. That's accompanied by a slight brand change, as you can see in front of you, as we really set about executing a three-phase strategy, which I'll take you through today on the exciting journey that EXR is about to embark on. A bit of education for those new to the story. EXR's assets are in Queensland's Turin Trough. It's an area that has been very exciting for many investors of recent, with some significant benefits to the location of the Turin Trough. Firstly, as you can see on the map on the right-hand side, it's located at the bottom of the Bowen Basin, just a few hours inland from Brisbane. That location there lends itself to a fantastic proximity to infrastructure and to markets. We've got not only the Wallumbilla gas hub right next door to the area of operations of the Trone Trough, which is the pricing point of East Coast gas. Many operators that you would see that talk about their cost of delivery to the Wallumbilla gas hub. We are right on the doorstep of the Wallumbilla gas hub, and so therefore the price achieved, which last quarter was around $13.60 a gigajoule or so, is the price that we could expect to receive for some of our initial production. Secondly, the trough itself sits just next door to several pipelines. There's pipelines connecting to the East Coast gas market, as well as several pipelines that connect the 25 million tonnes of LNG capacity at Gladstone directly down to where the trough operations are. And then finally, additional piece of infrastructure that's quite important for anyone that has followed from my time at Strike, where we were trucking condensates across the country in order to monetize those. There's been quite a lot of liquids production that's come out from successful flow tests of other operators within the basin. And fortunately, the trough sits in between two operational refineries, with the Inland Oil Refinery out to the west and the Ampol-Lytton Refinery out to the east in Brisbane. One of the key points of today's presentation is the scale and the maturity of the opportunity that sits in front of EXR today. The resource itself inside of the Trone Trough for multiple of the operators is multi-TCF in scale. This is really the next major energy supply that can come into the East Coast, that can arrest some of the energy crises that have been unfolding throughout the states of the East Coast of Australia. We've also seen the maturity of the play continue to evolve over time. We've seen fantastic results from our neighbours at Omega, as well as at our neighbours at Shell, where multi-million standard cubic feet of gas production per day, as well as hundreds of barrels of associated condensate and light oil has been produced. That's on top of EXR's fantastic results that it demonstrated in the initial stages of the Daydream 2 flow test. And then finally, the maturity of this play, it's being led by a super major. It's a very unique situation to find ourselves here in Australia, where a company of the scale and quality of Shell, and that is validation for the endeavours that EXR continues to pursue here in the Turin Trough, and essentially is the underlying thematic of our strategy today. Finally, the quality and the cost. The gas that has been produced throughout the trough has met pipeline specifications, so you could expect to see low development costs once wells are starting to be brought online. That gas, outside of some compression and some liquid separation, will neatly fit straight into the pipelines and feed into the East Coast gas networks or into the LNG supplies of Gladstone. And then finally, one of the other benefits that the Turin has is that it sits amongst the prolific coal seam gas industry of Queensland, a very mature industry that has attracted multiple oil field services and operators and rigs, and we are the benefit of the availability of all of those services based in Queensland. A thematic which many people know quite well, so I won't spend too much time on it, but the East Coast is going through a significant energy crisis at the moment, where the availability of gas supply into the domestic network is under a considerable amount of strain. As you can see from the chart on the left-hand side, the existing identified reserves, both developed and undeveloped, have essentially declined down to by about 2030 or so to about less than 50% of what the market requires. That is creating a market pricing response, as you can see on the chart on the right-hand side, where prices have been elevated for several years now, and sometimes some 3 times that of Henry Hub gas pricing that we are experiencing in the east coast of Australia. That is absolutely not sustainable, and we expect to try and arrest some of those price rises through the success of the Turin Trough. It will take something of the scale of the Turin Trough, which is multi-TCF in nature, to have any impact on the dynamics that you can see in front of you today. A little bit of background on where the Turin Trough sits. I notice someone's just asked a question. We will come to the questions at the end. You'll have to excuse me, I'm running a bit of a one-man band here at the moment, so I'll address the questions once we've completed the presentation. Elixir Energy's trough today, position in the Trone Trough, covers some 2,000 square kilometres or 500,000 net acres, and that's across 4 permits, which you can see depicted in the light sort of maroon colour in the centre and on the western side of the basin. We're surrounded by fantastic and successful operators in Omega, oil and gas, as well as Shell, who's really been leading the charges, and Santos, where Elixir also shares 2 joint ventures with. Our acreage, due to the scale of it, is beautifully geologically diversified against the plays that have been successfully interrogated in the Turin Trough today. The dry gas, the gas condensate play, as well as the light oil play in the permit. So I'm just getting a point coming through. Just checking that everyone can see my screen. Sorry. Let's go with sharing it again. Should all be available now. Apologies about the technical interruption there. Moving on, and so we're diversified across those plays there. And one really important piece, and is cornerstone of the strategy, is that Elixir Energy owns the acreage in joint venture with Santos, and also 100% to itself, directly to the north, south, and east of Shell's primary area of operations. Shell has really been leading the charge and validates a lot of the activity that Elixir has been going through. The company's assets cover some 2.6 TCF of independently certified gas resources across these assets in the basin-centred gas play, or tight gas sand play, as it's come to know. And this is a really exciting opportunity of scale and quality that you have in front of us. As part of my review at Elixir, I look back on the results that the company had put together. Credit to Neil and the team. Historically, they put together a fantastic portfolio of very high quality, really exciting acreage in the Turin Trough. What I have noticed is a really strong over-reliance on external parties for the operational delivery of Elixir's strategy, something I intend to arrest and bring in and increase the operational discipline of Elixir Energy as it starts to move its way into being recognised as a highly credible operator in Queensland. But the results that you can see here from the Daydream to flow test is that Elixir has actually already delivered very impactful and positive results from the flow testing. The original perforations and stimulation of the Permian sands in the Laurel horizon generated more than 2 terajoules a day of stabilised flow rates. When the other 5 horizons were stimulated and put on test, we saw 2.8 million standard cubic feet a day, or around 3 terajoules a day of gas production. That's from a vertical well, which is probably some of the highest flow rates that the Turin Trough has seen from a vertical well. Unfortunately, there was some interventions on the lease with the testing equipment, which resulted in changes in downhole conditions, very big drawdowns on the reservoir. As a result, we started to see an impairment of downhole or bottom hole conditions. That impairment resulted in a decline in the gas flow rates, and ultimately potential below surface damage to the wellbore infrastructure. And then that damage was exacerbated by virtue of the fact that it took over 100 days or so before the well was brought back online and back into full test. And unfortunately, at that point in time, the deterioration of the downhole conditions meant that the well did not come back in the way that it started. What I would encourage investors today in the EXR story to look at is that the initial testing results from Daydream 2 was incredibly positive. And as I said, from a vertical well only, when we start to extrapolate what a horizontal well would do in this location, we can start to get quite excited by the size and the scale of potential flow rates from our reservoirs. As I've sort of started to indicate, we have got validation of what we are doing through Shell's activities in the Turin Trough. Shell has been quietly going about its business, either for public relations or commercial reasons. But it's very, very unique in Australia to have a situation where you've got a new play being unlocked at scale and at speed by a company of the quality and the size of Shell. If you cast your mind back to anyone that's followed my previous tenure at Strike, it was really down to small companies. I've stared down the barrel of being an Uber driver or a CEO in the past, and having to bet every dollar the company has on well results. We are really benefiting from the fact that Shell is leading the charge here in the Turin Trough. They've been drilling several wells inside of 3D seismic over the last year or so. They've been testing those wells on and off, continuing to test those wells, is my understanding. And some of those wells with 1,000-metre lateral sections, but they've been generating multi-million standard cubic feet a day and hundreds of barrels a day of condensate flows. That's really exciting because it's obviously propelled Shell into the next phase of its activity. Shell is looking to bring in the next 1 million pound hookload super heavy duty rig, onshore rig, into Australia, the other one operating in the Beetaloo Basin with H&P. That rig is being brought in to drill extended reach horizontals, multi-thousand-metre long lateral sections inside of the Dunk Sands, which is part of that BCG type gas sand play. And they're also looking to shoot over 800 square kilometres of brand new 3D seismic. Those are not activities that a company like Shell would be undertaking if they did not see a significant amount of new gas supply being able to come into the East Coast market and potentially feed into their LNG project, QCLNG, which they have and share with CNOOC in the midst of it. So this is validation of everything that we're doing. You can see just how fortunate the acreage is that EXR has that surrounds that area of interrogation by Shell. Moving on to my strategic and operational plan that the board and I have set about commencing execution. First of all, my review has resulted in a series of objectives that I would like to get underway. As I indicated previously, the first of that is improving the operational and technical discipline within EXR Energy. We've seen a significant over-reliance on third-party contractors for the drilling, execution, as well as the stimulation and completion of EXR's wells, and that has resulted in a little bit of an arm's length outcome to the results that we have seen. I intend to increase the company's internal capabilities and really set about going and becoming the cheapest driller in the Turin Trough and lowering our drilling costs and being recognised as a credible operator here in Queensland as we start to move on our journey towards production. The company has been running at a slightly inflated operating cost for various different reasons. We also had some historical Mongolian assets that the company has written off a couple of weeks ago. We've very looked to reduce those operating costs by around 30% or so as we target increasing the amount of money that we have going into the ground or into petroleum-based activities. Thirdly, I'd like to see the Turin Trough operators banding together under a rising tide opportunity where we can collaborate, share our experiences, share data, as well as support any multi-user infrastructure that could be deployed in the basin. Obviously, with the amount of liquids production, there are opportunities to aggregate liquids and to move those liquids via pipeline versus trucking, as well as there's potentials for early gas pipeline infrastructure to bring our gas into the Wallumbilla gas hub. All of those opportunities will benefit all the operators equally and will create a path to incremental and small production and cash flows for some of the smaller operators in the Trone Trough like Elixir. I intend to also increase our capital efficiency. Whilst we have a very large acreage position, we will start to focus our attention in the deployment of our limited resources on a small area in order to demonstrate commerciality and take the company towards that initial cash flow and production, as I indicated. My fifth point is I'd like to deepen the funding runway. Small cap resources, businesses that are funded for not only the next milestone, but the milestone after that, put on and create sustainable value rather than walk from milestone to milestone. I intend to prosecute several alternative, not minimal dilutive opportunities to bring additional capital into the business. They may include, but are not limited to, the sale of a royalty over some of our assets, potential selective farm outs or farm ins, as well as pre-sales. One of the benefits that we have here on the east versus some of my time more recently in the west is that we have an incredibly short East Coast gas market where major industrial gas users are willing to use their balance sheet to help secure their future energy supplies. And that's something I intend to look into in great depth. And then finally, again, for those that have followed my tenure at Strike, we executed 3 major pieces of M&A that supported and built the company to the company that it is today. I will continue to prosecute M&A plays across Australia where they make sense and where the outcomes of those opportunities may realise some of our strategic objectives in an accelerated fashion, potentially broaden our funding options. Moving to the strategy itself, our 3-phase strategic plan can be underpinned by our strategic mission statement, which is where Elixir aims to be a strategic, fast follower in the Turin Trough, leveraging our neighbouring developments and investment activity to accelerate Elixir's progress. We have the goal of producing gas by the end of 2027 through the conversion of 150 BCF of 2C resources to 2P reserves. To achieve that, I intend to go through 3 very deliberate phases of the strategy. And the first of that is about securing our acreage, 100% of our Turin Trough acreage, under what they call a potential commercial area or a retention license under more colloquial terms, which will give us 15 years of tenure. That will require us to execute the remaining work programs that we have across the Turin Trough, the drilling of 2 wells that we have, Diona 1, where we are carried, Laurel 3, where we are carrying Santos, as well as a couple of 100 kilometres of 2D seismic in one of our joint venture permits with Santos. Once we have completed the first phase, we'll then make a decision whether we move into the second phase. One of the great pieces about compartmentalising this strategy is that the underlying outcomes of the Turin Trough will be a rising tide, and we can make a deliberate decision to move from one phase to the next as capital becomes available through the prosecution of some of those concepts that I had gone through previously, or if the equity markets are there to support the company at a sufficiently attractive cost of capital. There is nothing that is propelling the company to move from one phase to the next, and I do not intend to have the company zombie walk from milestone to milestone, from equity raise to equity raise. So as we move into the second phase, we will focus our attention and our financial resources and operational outcomes on a small area called Block A, which sits in ATP 2077. Just jumping back to the map for you to be able to see that. Block A is this permit, this particular block here, which contains already 184 BCF of independently certified 2C resources. You can see that it's wedged right inside of Shell's area of operations. Block A is an area where we're going to focus on. We will drill a well in the northwest corner of Block A. We will look to increase the seismic data density over the area to support maximum reserve definition, and we will look to demonstrate commercial flow rates from that well that we drilled in the northwest corner of Block A and commence that reserve conversion. At that point of having reserves, we can then start to look at working with our neighbouring operators in the Turin Trough as to how do we aggregate some of the completed wells throughout the area to commence early phase gas production. If it's 2 TJs, 3 TJs, 4 TJs, all of that will make an incredibly impactful outcome on Elixir's bottom line. 2 TJs a day at $12 a gigajoule is around $14 million a year of operational cash flow. This is the impact that a small amount of production can have. It can not only post its costs, generate a bit of additional free cash flow to go into the business to be deployed into seismic and other drilling operations. So that's the 3 phases. I intend to try and reach that outcome by the end of 2027. It's an aggressive and ambitious timeline. For those that have followed, again, my tenure at Strike will know that is the speed I like to operate at. I think that as you'll see as we go through each one of these phases, each one of these milestones is underwritten by already acquired data that was already sitting inside of the company. So as we move into phase 1, there is a well that will occur late Q3 this year. It's called Diona 1. Diona 1 is a transaction that the company executed in around February of this year. It's essentially a farm out to another small oil and gas company called X-State. X-State will be carrying Elixir for the Diona 1 drilling in Q3 of this year. The overarching thesis of Diona was to farm out the well so that we met the minimum work commitments of block ATP 2077, where we have farmed out what I would call the Diona sub-block, which you can see in the bottom right-hand map outlined in red, where the 2 Turin sub-blocks A and B are retained by Elixir at 100%. Diona is a conventional target that sits on a nose just outside of the Permian source kitchen. It has around about a 50% chance of success. It's a 4-way dip closure on an anticlinal structure. It's ideally located sitting just outside of the charge and migration window for the hydrocarbons coming out of the Bowen Basin. It's right on top of the Wagumba gas export line, right near the Silver Springs gas facilities. And if this well is successful, we could reach some of our strategic outcomes of going into production ahead of schedule. However, please note that this is a small conventional target and is the transaction itself is put together to secure our Turin acreage. The result of Diona 1, whilst we are working towards success, is not the final outcome of the success of Elixir's 3-phase Turin focus strategy. So this is an exciting well that we are carried for it by X-State. We'll go down in Q3 of this year and could realise potential early production for the business. As we continue through phase 1, we move into the Turin activities. You can see our first retention activity that we need to conduct is the drilling of a vertical well in the Santos joint venture permit 2056. We'll be drilling the Laurel 3. What's fantastic about Laurel 3 is that we can map the Dunk Sands, which is the target reservoir of Shell's activities. We can map that at the Laurel 3 location. You can see there's 2D seismic that sits over the Laurel 3 location, as well as intersecting areas there, where we can see that the depth of those Dunk Sands is similar to the results of the Dunk and Bathurst wells drilled by Shell. So we expect to intercept the dunk sands at similar depths to those that Shell has been prosecuting in its area of operations. We will look to potentially apply some unique or novel research and development concepts to this well, where we will apply for an advanced finding potential R&D funding of this well in the early part of the next financial year. And this well could underwrite and prove the presence of the dunk sands commitment with hydrocarbon charge throughout that, which will ultimately the well will be suspended for future horizontal drilling. Omega did a fantastic result over at Canyon 1 where they proved that they could land horizontal in their canyon sands out of their intermediate casing string. That's exactly what we intend to do here. It's part of our fast following strategy, and we're going to look to land a horizontal with Santos at some point in time in the future when Santos and EXR decide what the path forward is for ATP 2056. And then finally, the last piece of our retention activities that we will need to conduct is 200 line kilometres of 2D seismic in ATP 2057, which is the permit directly to the south of Shell's area of interests. Again, opportunities sit there to potentially collaborate on mobilisation and demobilisation costs in the seismic fleet before that acquisition, so we can bring those costs right down. And that will be new available seismic, again, along the margin of the trough, and depths similar to that Shell has been drilling a bit further north. As we move into phase 2, it gets down to a very focused area. As I said, it's going to be in Block A. The little map down on the right-hand side, you can see Block A here. We intend to drill a well in Block A. Block A is covered by multiple 2D lines where we've got intersecting 2D lines, and we can tie those 2D lines back to the 3D seismic that sits over the top of the Shell area of operations where they've been drilling. Particularly, we can map the dunk sands from Bathurst 5 to the well that we'll drill in Block A, which we are provisionally calling Daydream 3. Daydream 3 will be drilled in that northwest corner. You can see the seismic line in the top right-hand corner here, the Shell 3D seismic down into Block A here, and this is around the area where the cursor is sitting, where we will be drilling the Daydream 3 well. We're sort of about 7 kilometres or so away from Bathurst 5, which you can see from the picture down here on the bottom right-hand corner. Was a successful well for Shell. We understand that well has been flow tested on and off over time. It's great to see that we're right in the neighbourhood of successful well results, and we'll be drilling Daydream 3 as close to Bathurst 5 as possible. We intend to drill a vertical well again, down to Permian level. We'll collect logs and gas samples across the target reservoirs, the Dunk Reservoir, and down all the way to the Lorelle. And then again, similar to the process of Lorelle 3, and as delivered by Omega at Canyon 1, we will suspend the well, plug it back to the intermediate casing string, and then prior to drilling a horizontal leg, we will look to farm out that horizontal leg. At the time of that farm out, we will have proven that we have got gas-charged Permian dunk sands of sufficient reservoir quality that when we model the stimulation program, that we can see commercial flow rates of results and commercial flow rates as a result. That is an exciting opportunity for any company looking closely at the Turin Trough to participate in, and I expect once we have gathered that information, we have made that pre-investment, that farm-out process will be very competitive and very exciting for the company at that time. That farm-out will include a 3,000-metre long horizontal section, with a 30 to 40 stage fracture stimulation as a preliminary concept, which should be delivering multi-digit million standard cubic feet results in the basin, and that will underwrite the commercial flow rates that will allow us to then move forward and start to certify our initial 2P reserves in the basin. Also, similarly, as part of phase 2, I said we would increase data density across Block A. Interestingly, as part of Shell's 800 square kilometres or so of 3D seismic, they have applied to the regulator for a data acquisition authority to shoot around 43 square kilometres of 3D seismic inside of Elixir's Block A. That covers about 57% of the total block area. You can see the application down here, which they made to the regulator, Block A being this area here, the Daydream 3 location denoted in the map as well. This ingress area covers the Daydream 3 vertical well area, as well as the likely horizontal path into the area of low stress, which is sort of the angle pretty much that you can see the Daydream 3 table box. That will cover those 3 kilometres of horizontal. We will potentially look to secure the remaining block in 3D seismic as well, and that will give us the highest conversion of our 2C contingent resources to 2P reserves and demonstration of those commercial flow rates. You can see how we are very quickly getting down to a finite area with fast following inside of Shell's activities in order to be able to demonstrate our own reserves. When we look at the ambitious timeline that we have set for our results here at Elixir, we've got phase 1, which the company is funded to deliver. The company currently has $10.6 million of cash and net receivables from its previous or historical R&D grants. You can see the corporate or capital processes that we will take over the next couple of quarters, about 6 months or so, as we move into the Diona 1 drilling, where EXR will be drilling that well on behalf of the company. We then, in sort of mid to late Q4, we'll start the drilling of the REL 3, and then we'll shoot the 2D seismic in early Q1 of 2026. At that point in time, we will have completed phase 1. We're fully funded for that, and we should have remaining cash to take us through to the end of the financial year at that point in time. We will be applying to the regulator as we meet each one of those work commitments for the conversion of our ATP authority prospect into a potential commercial area, which will allow us to book our retention and meet our strategic outcomes and objectives from phase 1. 15 years is a long time to have 100% retention of your acreage. As I said, the amount of investment going on in the Turin Trough just next door, we expect to see an underlying increase in the value of the company's assets over time. However, if we are successful in delivering some of those alternative capital processes, we will look to sanction phase 2 as early as possible. That could occur in Q3 of this year, which would allow for the creating a program of drilling for the REL 3 and Daydream 3 to be done together. There's about a 30% saving across the total program if we can create a rig program there where the mobilisation and demobilisation of equipment can be shared across those 2 wells. After completing the Daydream 3 well, the drilling will be going on all throughout next door in Shell's permits, as well as I understand Omega's got activities that it is going to be conducting, seismic operations, etc. We'll be looking to farm out Block A. We're giving ourselves over 6 months to try and achieve that, which will land us into late 2026, where we will then be drilling the horizontal leg of Daydream 3, followed by the fracture stimulation and test, all campaigned together. And that will allow us to come out right off the back of that with a full data set, a proven demonstration of commercial flow rates, and leading into our 2P reserves completed in 2026. That will then follow on to phase 3, which is in 27, with that early stage production, where we're trying to bring some of those completed wells into early cash flows, bring the incremental cash flow into the business and start to expand out throughout our dominant and large position that we have in the Turin Trough on 2,000 square kilometres. I can't stress enough that we're not compelled to move from one phase to the next. The board and I will prosecute that decision very, very closely. We will not be meandering or wandering from milestone to milestone, expecting the equity markets to be there. We are going to be shareholder focused and ensure that if we move from one phase to the next, we're doing it at the least cost at the shortest time frame as possible. Noting that But the access to low cost of capital is a function of various different work streams that will be occurring from today onwards. And so that's the timelines that we intend to take the company on. It is a dedicated timeline where we believe that we can reach production in 2027, the conversion of a meaningful amount of 2C resources to 2P reserves, which would represent a underlying valuation worth multiples of the existing share price. So just wrapping up shortly, the reasons why I think this is a fantastic time to be involved at EXR is we've just rolled out our disciplined three-phase strategy where we're going to be a fast follower. We're not looking to reinvent the wheel. We're going to be conducting operations right in the areas where hundreds of millions of dollars has and will be spent in the Turin Trough. We're prosecuting a multi-TCF gas resource. We're funded for our first phase, and that's got a 2-well campaign in it, as well as some seismic. So there are critical milestones that will ultimately land the company in extended period of retention of our tenure. We are, looking to drill high quality and low impurity gas resources. I can't stress this enough. After we drill and complete some of the flow test these wells, they will be ready to go into production systems. Cooperating and collaborating with other operators in the region may generate early opportunities to bring small scale production online. And we are validated by the activities next door by Shell, Santos's retention of their acreage, and by some of the impressive results that Omega has been delivering next door to us. And then finally, for anyone that took a good look at my appointment announcement about 6 weeks ago, I'm absolutely aligned with shareholder outcomes. I'm strongly incentivized to deliver sustained shareholder share price appreciation. And that share price appreciation is multiples of where we see the current share price today. It's a fantastic opportunity to get on ground floor with management as we start to go through this process here. We're led by a fantastic board, which is chaired by Richard Cotty. Many of you who would know, who is one of the most successful entrepreneurs that Queensland has generated in our industry. The market capitalisation today, as of late last week, was only $36 million. As I said, with about $10+ million of cash and net receivables coming through, representing a minuscule enterprise value of around 25 million. So it's a fantastic time to join me. We're really building this company to being a very credible operator over time. And it's something I look forward to working with all of you, having a very active dialogue on. I'm open to any questions, and we've got about 10 or 12 minutes or so to ask any questions. So stop sharing now and move to questions if anyone wants to ask it. Just going to go through the Q&A box. I've got a question from Scott Ashton. Hi, Stuart. Slide 9, just to clarify which permit is likely going to be booking of this 150 BCF reserves. That is ATP 2077 Block A, where we are 100% equity owner currently and control our own destiny. Like I said, there are some joint venture partners of Santos have been frustrated at times, whilst we really, really like the acreage that we farmed into 2056 and 2057. That acreage is in joint venture with Santos. We do need to spend time with Santos after we transfer operations and operatorship back to them, post the initial work programs, understand what their timelines are to interrogate and do additional activities there. More from Scott Ashton. Slide 13, is there likely to be a data sharing agreement for the ATP 2077 Block A? Are you looking as part of some broader deal? Look, I am here to be cooperative and collaborative with all the operators, whether they're big, large, or small or medium in scale. I think sharing data is a fantastic way to create that rising tide outcome. Every time that we see Omega, EXR, Shell, or Santos conduct any activities, we should all be generating appreciation of the underlying value of our assets. And also, as I said, working on multi-user outcomes where we can lower the cost of production and increase the scale of production for the trough. Question again. We've been busy. Us two at the coals and the Turin Trough, still low stress target preference. Because we intend to prosecute the play in a similar manner as that of Shell and Omega to date, which is through horizontal wells. The vertical wells, which did perforate, or Daydream 2, which did perforate the dry coals, they will be left behind for the second phase of production operations in many years to come. And so we'll be putting horizontals into the basin centre gas play or the tight gas sands. We elaborate on the path to securing PCAs and which permits are as close to the PCA grant. We've completed our work program at ATP 2044, or the Grandis project as it's known, through the drilling of Daydream 2. We have a PCA application in for Grandis at the moment. We need to complete the drilling of the REL 3, have the drilling for Diamond 1 completed on another half, as well as shoot the 200 kilometres of 2D seismic in ATP 2057 to have all the rest of our permits qualify for PCA again. Last question, given the flanks of the Trone Trough are likely to be more liquids rich as a result of stratigraphic trout wind showers, is there BCG permeability goal theory still valid? But tight gas sands are being mentioned, so do the flanks of the TGS provide a much quicker route to value creation section? Look, we have a fast follower approach, Scott. So we're going to be working from the area of the best results to date outwards. That and Shell has certainly been leading the charge on our western side of the Turin Trough. So you can see from the operational and strategic plan that I've outlined today that we're drilling right up against the Bathurst 5 result, and then we'll be drilling from there. So, whether that covers the BCG play or the TGS play, will be the outcome of those wells and set of results presented to surface. All I know is that we do expect to encounter liquids production. Like I said, at REL 3, we're going to be drilling the Dunk sands at the exact same depths that the Dunk 5 and the Bathurst 5 wells were drilled. And so we can probably expect to see similar geological conditions and therefore phase conditions of any point of plants. That's all I've got in the Q&A box. I will pause for a minute or so for any further Q&A. Otherwise, my email address is on the bottom of all of our announcements. My phone number is in my appointment announcement. Please feel free to send me a text or drop me a phone call if you'd like to extrapolate on the discussions or the presentation that we've had today. This is a really, really exciting time to be involved. Thank you to the Elixir board and to the Elixir shareholders for having me on. I am one of the only people that in the last decade in Australia has taken a small explorer to gas production. I know exactly what's involved. I know the large amounts of human capital that need to be deployed. I'm excited and I'm energised by that. And, we're looking forward to getting mobilised. So if there are no further questions, which there appear not to be, we'll end the event today. Thank you for your attendance and go Elixir. Cheers.